If you're looking for a house in today's market, you probably feel like you're caught between a rock and a hard place. Maybe you feel like you should just wait, hold off. Maybe interest rates will come down. Maybe the market will crash. You'll be able to get a better deal. And that can be really stressful and uncertain. We don't know exactly what will happen in the future. I think that there's another option that doesn't get enough coverage, which is buy a house that you love now and then refinance it later when rates come down. So I want to explain what a refinance is. And a catchy way to remember this is marry your house but date your rate. So what that means is find a house that you love that you can live in for several years, but date your rate. Be willing to let that go and change it when a better opportunity comes calling. So a refinance typically is when rates improve and it makes sense, financial sense for you as the borrower to restructure your loan, keep the existing house, and then a lot of ways that comes back to you is lowering your monthly payment because the interest rate has gone down. But there are actually several options that you as the borrower have, and I want to get into those. So in the spirit of marrying your house and dating your rate, you find a great house that you love, that you can live there for several years, but then rates improve. They drop by 1% or 0.5% or whatever, and it makes sense for you financially to refinance. So we kind of already covered one of those. You refinance at a lower interest rate and your monthly payment goes down, right? You'd never do this. You'd never wanted this to get your payment to go up, right? Unless maybe you were shortening the term, which is another one that we'll talk about. People will refinance their home and maybe their payment stays the same, but they are, because of the interest rate, now they can afford to go at a shorter term. So that over the life of the note, they are paying less interest, which can be a huge benefit for people. A third option might be for some people's loan programs to keep their loan length the same. So they're not changing the length, but they do get to take advantage of the lower rate and it affects their monthly payment. And then some people even get to have their cake and eat it too. So because of the lower interest rate, they change the term. So maybe they shorten the life of the loan. So they're paying less interest over the life. And they also save money on their mortgage every month. So that's the best part about a crappy situation paying interest, is that you're not stuck with it for life. You do not have to live with that forever. So the takeaway from all this is that you can better your financial position through refinance and you're not tied to it forever. Now, a mortgage professional is going to be your very best asset in helping you navigate which of these scenarios really works for you for the short and long term. But I'd love to be a resource and help point you in the right direction. We know that over history, rates do fluctuate and we expect that they'll go down eventually. So this could be a great opportunity for you to take advantage of the situation. And if you've got other questions, feel free to reach out.